Okay, what is going on, CYPRX YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, and foreign exchange, how to trade them properly utilizing technical analysis, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, I'm going to show you guys how you could have utilized fundamental news articles that came out today for the United States dollar to give yourself an advantage when trading the foreign exchange markets. I'm going to show you how I was able to do that utilizing the strategy that I teach you guys here on the YouTube page in tandem with the news events manipulation that came out today. So stick around for that. If you guys are interested, make sure that you smash that like button. I'd like to also say before we get started that the sale that I'd given you guys for the 15% off, you guys can utilize CYPRX V-Day. It'll give you 15% off of the CYPRX mentorship. Again, that's CYPRX V-Day. I have that here for you guys pulled up on the screen. You guys can utilize this discount code to give yourself 15% off of the CYPRX mentorship. Without further adu, let's get started in today's video breakdown. So here we can see on forexfactory.com that we had some CPI come out. We had some unemployment claims come out. You guys can go check this out. For people that aren't too familiar with this website, it's just forexfactory.com. It gives and releases news fundamentals. But we see here this news, and pay attention to time, guys. Okay, time is extremely important in this market. We see 5:30 a.m. and that is extremely important surrounding the strategy that I teach. Okay, so I have my charts, or excuse me, my fundamental charts set to Pacific Standard Time. You guys can go and just click this little tiny button right here. This one up here will lead you to a time zone switch where you can change the time zone for yourself. I have mine set to Pacific Standard Time. You just save your settings and it'll change the fundamentals for you to come out and tell you when they come out. Whatever time frame that you're in. Okay, you can also utilize this little green tab right here and pick whatever kind of fundamental you want to be released for whatever currency pair you're trading. I like to have mine set for GBP, JPY, and USD because those are the pairs that I trade. So I apply that filter and then I can scroll down to where we see Thursday, February 10th. We can see that CPI came out at 5:30 a.m. as well as unemployment claims. So how utilizing this information at 5:30 a.m. in tandem with our trading can we give ourselves an edge in the market? Okay, let's go over to the charts real fast and I want to show you guys. So we see that the news came out, okay, on forexfactory.com. It looks bullish, right? It looks bullish and it looks positive for the United States dollar. Okay, we see green utilizing the color coding here that they have on forexfactory.com. Most people think that when information comes out printed green, it's positive, and when information comes out red, it's negative, right? That is a manipulation tactic by the elites to distract retail traders. So watch how this news being positive actually gave us a positive trade for GBP JPY and had a negative effect on the United States dollar. Okay, so looking here on the left hand side of my screen, I have GBP JPY pulled up. Okay, and we can see here down at the bottom of my screen, all right, I have my chart set to Los Angeles UTC. You guys can go ahead and click this little square right here and it just, set your charts to whatever time frame you're on. I like mine set to Los Angeles UTC for this example. Usually I have mine set with New York Eastern Standard Time. So that way it looks like I'm trading in correlation with New York Eastern Standard Time. Okay, so you can see down at the bottom of my charts pinned up with my crosshair, we see 5:30 a.m. Okay, look down at the bottom of my chart. So this is when the news fundamental CPI and unemployment claim came out. Okay, and you can see this nice bearish wick that took place on GBP JPY, and then following that we see a bearish move, okay, to the downside. Now if we look at the correlation over here to the right hand side, what can we see? Same thing. Okay, down at the bottom of my charts vertically we see 5:30 a.m. and we see that news came out positively, or at least it looked positive for the United States dollar. Okay, and we can see that on the US dollar index, we had a buying opportunity where news anticipated traders anticipated that the news was positive for the United States dollar and they bought. Okay, so if we utilize this in correlation, look at this. On GBP JPY, what is it that I teach you guys? Okay, we see early buyers and early sellers in this area. Okay, the market makers utilize this news pump, the anticipation from people selling GBP JPY and buying the United States dollar to liquidate early buy positions beneath these lows here. And then they reverse the market. Now I'm going to dive into detail with that in a second, but same here. Look at this. People anticipated that the news was positive based on how it printed off of forexfactory.com or whatever fundamental article that they're getting their news from, and they bought the United States dollar. But if we zoom out, look what happened. After people bought the news, people took profit and then the market sold off. The United States dollar completely tanked. and liquidated any stop losses beneath people who bought the news. Okay, so any people that anticipated the news and bought because they saw that it was positive on forexfactory.com, or again, wherever they're getting their fundamentals from, completely got annihilated after the real market sentiment and the real market move came in. Okay, so this market down move on the United States dollar completely liquidated any positions, where vice versa, what can we see? Same thing over here, okay, trading in tandem with the banks and institutions, we can see that this was not a real institutional move, okay? This was a false bearish dump to the downside to liquidate early buy positions, and we can imagine that anybody, vice versa, okay, we can see what? Divergence here. We can see that anybody that was selling this anticipated news because the United States dollar printed bullish news fundamentals, okay? Again, usually when the United States dollar is bullish, that means GBP JPY is bearish. Why? Because people are usually buying the United States dollar and selling the Great British Pound, okay? So we can imagine that because the news came out bullish for the United States dollar, people anticipated a sell on GBP JPY, and we can see here those people got annihilated just like they did for people who bought the news or bought the anticipated news for the United States dollar and then got annihilated when the market reversed. We can see that here on GBP JPY. Now, utilizing this information, okay, how can we trade this positively utilizing this strategy? What is it that I teach you guys? Now, really pay attention to this. This is when it gets kind of insane. And you guys are going to be like, wow, what he's teaching really actually does make sense. All right. So let's zoom into the charts. What's the first thing that I teach you guys to pay attention to? Early buyers and early sell positions. Okay, well, what can we see? Prior to New York session here in this area, we see early sell positions, and we see prior to 8:30 a.m., okay, when that news came out, again, that's 5:30 a.m. Pacific Standard Time, 8:30 a.m. Eastern Standard Time, right? So I'm just going to say 5:30 a.m., but that's right here. This is when the news came out, okay? So trading before this time, okay, is highly dangerous. Okay, again, I've told you guys that multiple times on this YouTube channel. You can believe me or not, but this is where the majority of individuals are anticipating a move. They're impatient and they can't wait for the market to play out and give them signals that the market is going to move in a certain direction. So what do we see? We see the sell positions early prior to New York session and prior to 8:30 a.m. get liquidated. We also see the buy positions prior to 8:30 a.m. prior to the news coming out get liquidated. Then the market rejects a psychological level. Look at this accuracy, guys. Okay, look at this accuracy. We see the 157.050 psychological level get rejected. And from this psychological rejection, what do we see? A bullish new break of structure. The market then comes and creates a new bullish high. So the market creates a new structural high that leads to a new structural higher low. Okay, this is the bread and butter of what it is that I teach you guys on the CYPRX YouTube. So we see manipulation, we see liquidation in the form of sell positions, we see liquidation in the form of buy positions. That leads to a new market break in structure. Okay, so now we have a new market structure high that leads to a higher low, higher high formation, right? This is exactly what I teach you guys. So now that we see this grab of liquidity, higher high, higher low, higher high formation, we know now that this was a false bearish dump based off of the news manipulation. Again, I've broken that down for you guys. We can see that the news came out positive for the United States dollar, or at least it looked that way, right? But we can see here, same thing that the United States dollar did. People anticipated that the news was bullish. They bought, and then the real institutional move came in and completely liquidated any people that bought in this area with their stop losses beneath these lows. Okay, so this was an anticipation move, buy the rumor, sell the news event. Okay, so with that being said, with this market information, how could we have capitalized on a beautiful risk to reward trade on GBP JPY? Scrolling over here, again, paying attention to what? The devil's in the details, guys. We see a grab of liquidity that leads to a market break in structure, that leads to a new higher low, that leads to a new higher high. So now that we were operating at this new higher high, if we wanted to get in on this uptrend, now that the market has given us and printed us the definition of an uptrend, which is a higher high, higher low, higher high formation. Most people think that the definition of an uptrend is higher high, higher low. No, you need to see bullish confirmation. You need to see a new high get printed, and then you can react to the market where we see previous demand regions where the market could potentially pull back into to then take price higher. And you're looking to enter in at those dip buying opportunities. Okay, and look what we get here. If we had just taken our Fibonacci based off of simplicity, what I teach you guys here on the YouTube channel, taking your fib from the higher low after the grab of liquidity that leads to a break in market structure, we can see that price pulled back into 70% discount and we go. Okay, you could have utilized the Fibonacci extensions for your take profit areas. Okay, the 100% extension or the 200% extension both would have been smashed. All right, but based off of the simple CYPRX methodologies that I teach you guys here on the YouTube channel, again, I go into extreme detail in the CYPRX Advanced Mentorship, taking people from a beginner perspective all the way to an advanced perspective on how to read these markets via technical analysis. Okay, again, that link is in the description down below, and we are doing a Valentine's Day sale for 15% off that mentorship utilizing the discount code CYPRX VDAY. Okay, but guys, this was a simplistic trade based off of avoiding manipulation in the market, which I've taught you guys how to do. Understanding how anticipation before 8:30 a.m. orders in the market get placed by impatient traders prior to 8:30 a.m. in that sweet spot right when New York session opens. We can imagine how many people, guys, look at this consolidation, how many people were in a battle, buying and selling, buying and selling, buying and selling, closing out their positions because the market reversed, buying again because the market reversed, selling and buying and selling and buying. And then boom, finally the news came out. We liquidated any sell positions above these highs. We liquidated any buy positions beneath these lows. And then the market gave us a directional bias. Okay, it broke structure after grabbing liquidity and created a new higher low. This is now the market respecting bullish order flow. And we can see the market created a new high and broke fractal structure again. So now as CYPRX traders, we can say to ourselves, all right, we've created a higher low after the break of structure, after the manipulation window, and we can clearly see that the manipulation window created a false bearish dump. Okay, now if we want to get in on the moving train, we have to ask ourselves, are we going to buy high? No, we're not. We're going to be patient. We're going to wait for a discounted pullback. Well, what has CYPRX taught me? After price starts to pull back at least 25%, we can take our Fibonacci from the low after the grab of liquidity to the new high that was created and wait for a discounted pullback of anywhere between 70 to 79%. And what can we see? Safe stops beneath the 100% discount. And we can see an entry at 70% would have accumulated a beautiful risk to reward. Had you have just been targeting your 100% extension, that would have been an RR of 1 to maybe 3 if you had tight stops. Okay, anywhere above that would have been a risk to reward ratio of 1 to 4, 1 to 5. Okay, beautiful execution on GBP/JPY. I didn't catch this move. However, utilizing the same methodologies, okay, if we go over here, I'll go down to the 30 seconds chart. I used the same principles to catch a scalp move once the market had trended, because I didn't wake up honestly until about 6:45 a.m. this morning. I didn't actually start peeping the charts until about 7 a.m. But we can see here, same methodologies. Look here, okay? What do we see? Let me get rid of some of this stuff. Same principles that I teach. If you guys want to hop in on the moving train, you have to see these certain patterns, okay? Well, what can we see here? We see the market create a low. We see the market grab liquidity from beneath this low. Then the market creates a higher high, higher low, higher high formation. Now that the market's created a higher high, it pulls back, it created a higher low, and created a new higher high. So now I had bullish confirmation that the market was still in an uptrend. So I took my Fibonacci from A to B. Again, just looking at this, after the liquidity grab, a significant higher low, taking my Fibonacci from A to B. And look at that, I got a 70% discounted buy position, placed my stop safely beneath the A to B move. And we can see how that played out, okay? I was just simply targeting a nice 1 to 3 risk to reward ratio at the 50% extension. Had I have held that, we can see that the market would have rallied into my 200% extension. Beautiful RR of a 1 to 7. However, I closed and took my profit at 1 to 3, okay? A nice 15 pip scalp on GBP/JPY, utilizing the same methodologies that I teach you guys down here in this area. I used in the trending market up here in this area. Again, the principles that I teach don't go away, okay? So just to show you guys the manipulation, and if we just read some of these articles, okay, the majority of them were bullish articles. Okay, look at this. Initial unemployment claims decreased by 16,000 to 223,000 in the week ended February 5th. Labor Department data showed Thursday the median estimate called for 230,000 applications in Bloomberg Survey of Economists. Continuing claims for state benefits dropped to 1.62 million in the week ended January 29th. Claims have been falling for the past week as labor markets get back on track from the spread of Omicron variant. Again, this is just simply a bullish article surrounding the news that came out. Okay, What can we see here? New U.S. inflation highs heaps pressure on the Fed. U.S. consumer price inflation came in a bit fair and a bit stronger than expected. All right, so these are two bullish articles surrounding the news that came out. How could we have utilized that in tandem with the news manipulation? We can see a sell-off, i.e. we see what? A buy-off on the United States dollar. Okay, I went over that, but then the market completely reverses. This was a buy the rumor, sell the news event. Okay, same thing. Utilizing the correlation between the United States dollar, the negative correlation, okay? Usually when the United States dollar is pumping, then GBP/JPY is selling off. And vice versa, if the United States dollar is selling off, GBP/JPY is bullish, okay? So utilizing the news manipulation, seeing how the news came out at 5:30, and this is when the anticipation came into the market, we could have avoided this, sat on our hands, and waited, okay, for the market to tell us what it wants to do. All right, this is again some things that I go over in extreme detail in the CYPRX Advanced Mentorship. You guys are more than welcome to that. Everybody enjoy their weekend. I said that I wasn't going to upload another video until next week. However, this was a beautiful trade setup surrounding what it is that I teach you guys specifically here on YouTube and what it is that I teach in extreme detail to the CYPRX Advanced students. I hope that you guys paid attention, took some notes to what it is that I was saying about news manipulation, being patient, waiting for the market to give you structural evidence on what it wants to do after the manipulation plays out, after you see grabs of liquidity, and after this sweet spot in time, okay? Blessings to you guys all. As always, be cognizant, be aware, make sure that you smash that like button, and I will see you guys next weekend. Everybody have a safe, productive weekend.